I think we're in a retirement crisis in this country today. Just about 5 years ago, Northwest Mutual did this report, asked a bunch of folks, hey, how much money do you think you need to retire comfortably? That number in 5 short years has jumped to almost 1.8 million.
What does retirement in the future look like?
For our generation and for the next ones, I would bet dollars to donuts that you can't count on Social Security. We've been living in this world of abundance for years. The concept that there's only 21 million Bitcoin that exist, they don't realize that that's no joke. Fractionalization is going to kick in, and people are going to realize to have even just 0.01 Bitcoin or 0.1 Bitcoin is going to be life-changing. Our founding fathers were statesmen second, entrepreneurs first. And somewhere along the line, we lost that. You now see more career politicians. And I was about to become one of those, and I was disgusted. I couldn't look in the mirror. I'm like, something's got to change. Around the corner from the office was a motel. And it wasn't like, there's like Motel 8, Motel 6. This was like Motel -2. And I stayed there for 9 months while we built the first business.
The founding fathers would be proud of that story, right?
They're not rolling over in their grave.
No. Hello, everyone, and welcome back to the show. I'm your host, Rob Wallace, and today I'm very grateful to be joined by Chris Kline, the co-founder of Bitcoin IRA. Chris, how are you doing today?
Wonderful. Good to see you, Rob.
Cheers. Welcome to New York City.
Oh, beautiful city, isn't it?
Yes. Nonstop, lots of action.
A little humid right now.
Summer in New York, I know it has its downfalls, but nothing beats the energy right now.
Oh, yeah.
So I'd like to jump right into it right now.
Okay.
You are the retirement expert. But for people in their 20s and 30s thinking about retirement coming up in 30, 40 years, it's daunting.
Yeah.
It's hard to know where to begin. Let's talk about the current landscape of retirement in America and what it's like for people who are still 30, 40 years out from that date.
Yeah, it's even for the folks that are coming close to retirement. I think we're in a retirement crisis in this country today. We're at a place where the cost of living has just gone exponential over the last 4 or 5 decades. And that's because we're doing what we all preach at bitcoinnews.com, right? Is we're printing to oblivion the monetary supply, and that's rising costs for everybody. And so even if you're just about to hit retirement or you haven't even started, folks are living a little bit nervous. Just about 5 years ago, Northwest Mutual did this report, asked a bunch of folks, hey, how much money do you think you need to retire comfortably? And the general thesis was about $500,000 to walk away comfortably. That number in 5 short years has jumped to almost 1.8 million. And it's probably just going to keep getting higher as rising costs keep hitting us everywhere from healthcare to home to long-term living, retirement living, pharmaceuticals, or whatever it might be. And you've also got a trapped generation, not quite our age, but a little older than us. And we might get there where you're caring for your parents that are older than you and financially supporting them. And you also have kids that you're trying to get through college. And if you can imagine that daunting task in your late 40s of, okay, I need to prepare for myself to retire, but I've got just all of these dependencies that are just bleeding out my income. And so, yeah, we're in a place. And then if you're younger, Gen Zs, the alphas, the younger millennials, you almost ask them about retirement and they somewhat chuckle, right? It's like, that's not even on their long-term roadmap because it doesn't seem like it's possible. Mm-hmm. And that's for a lot of reasons. You've got 401ks are at their lowest that they've ever been as far as participation and match. We're gig economy now. So a lot of folks are actually their own influencer, their own small business. And so they don't have that infrastructure of retirement planning. So it's up to you to take care of yourself. And it seems daunting because it's like an elephant. You try to eat it all at once and you're probably going to get sick and die. If you can take it piece by piece by piece, it becomes a little bit more palatable. But even then, if you have been saving, so if let's say you have done a good job, are you keeping up with just rate of inflation with the growth of your retirement every year? Or is the value of the dollar going down actually dissipating your retirement savings faster than you can keep up? Which is why we came to fruition. Our mission is to help Americans retire. And Bitcoin back in 2015, 16, people thought we were crazy. But now it seems like the most common sense thing for long-term investing.
And so how do you know if you're on track for retirement? If you're in your 20s, should you have 1x your income, your 30s, 2 to 3x? Like, how do you know that you are keeping pace with what you need to?
I mean, there's a common, it's kind of like if you can go to a lot of websites and say, how much do I need for retirement? What you look for is what is the year you plan on quitting to work? So if are you going to work till you're 60 or 70, or in some cases, people are working till their 80s? And then how many years are you going to not have income as far as new money coming in? And you're going to be living off of what you've put into the pile. Then you have to look at, what am I going to invest that pile into? Is it just going to be low risk index funds where I'm making maybe 2 to 4% per year? And then you have to decide, okay, what kind of lifestyle do I want in retirement? Do I want to just live at a retirement home and play bocce ball and kind of just count my days till the end and maybe my grandkids come visit me? Or do I want to travel when I'm in my retirement years? Do I want to, what are the things that I want to do? So for everybody, it's a little different. And that's where I think it becomes daunting, is because then you say, well, that's a lot of money I have to have. The best thing you can do is slow down the vision and just think about, what action can I make today? So every year you're allowed to make a contribution to your IRA. If you're under 50, it's $7,500. If you're over 50, it's $8,000. And you should make sure that you try your best to max out that contribution every year. You can't do catch up. So if you skip a year after April 15th, it's over with. You can't go back. And you can break that into bite-sized pieces. You could do $1,000 or $2,000 a quarter, or $500 a month to get to that number. And there's a lot of platforms like ours that allow you to start for $1,000 and then slowly just make contributions from your bank account as you have the available funds. What's nice about it is, once you get it over there and you get it in a retirement vehicle, it almost becomes like hands off. I'm not going to touch this. This isn't like my savings account that if I see something or I want to go on a trip that I might dip into to do that. This is my retirement. And in fact, once you put it in there, if you take it out, you'll be penalized for early withdrawal. So it's a really good practice of like self-discipline. Take the action, the small actions today, and it seems like a less daunting task later. I've had a lot of employees that have started. We have 200 employees at Bitcoin IRA. I've had kids that have come in, this their first job, and they max out their 401k that they can, and they know, like, it's short-term sacrifice, right? They don't, that's a couple $100 every paycheck that's not putting into their bank account. So they had to make some adjustments on their expenditures and their budgets. But when they get to this, at the end of the first year, and they're like, wow, I've got $18,000 here. Or in the second year, wow, now I'm at 36. Or even if they go smaller, 9, 18, 27, it definitely starts to grow up for you. Then, but you also have to think outside the box on your investment strategy. This isn't your grandpa or my grandpa's economy, where we don't get to just buy 3 or 4 stocks and in 60 years have a whole bunch of money waiting for us. We've got to be a little bit more crafty. And that comes with alternatives, specifically Bitcoin and other cryptocurrencies.
And let's talk about Social Security in general, right? I mean, it's a relatively new phenomenon. It's about 100 years old now. And the idea of retirement, of saying, okay, I'm 65 now, I got the rest of my golden years to spend out. Do you think that this is something that people our age will have in 20 years from now? Will Social Security still be around? And what does retirement in the future look like?
My dad just turned 58. Wait, I'm 40. No, 50. He's 59. He had me when he was 19. So yeah, that's in that math. My dad just turned that, and I don't know if he's going to really benefit from it. And that's 65, right? My grandfather, I know both my grandfathers got it, but they lived off their pensions from their work that they had, which those don't even exist anymore. And so for our generation and for the next ones, I would bet dollars to donuts that you can't count on Social Security. It's already almost insolvent. We're stealing from Peter to pay Paul to keep these things going. And it's really because the voting base, the strongest voting bloc of the country, is the boomers. And if you mess with them, you're not going to get elected, right? Like if you mess with their Medi-Cal, Medicaid, or their Social Security for the last 10 election cycles, those were no-go space. At some point, politics aside, it's an insolvent program. It hasn't been managed well. It's been not stolen from, but people have been it's been leveraged against, and its investment, I guess, spectrum would be the word, has been very, very narrow. So it'd be great if the Social Security would have put it in Bitcoin a few years ago. Maybe that would have springboarded us to where maybe we could have seen some Social Security over the future. I think that at some point, there's going to be I wouldn't call it a revolutionary, but there's going to be some kind of major shift in how Social Security is pulled from our paychecks and how it's used. I hope that they're going to go something that puts the empowerment more in the hands of the individual. So instead of the government takes this money from us and, oh, don't worry, we'll do a good job with it, and when you reach retirement, you'll get a nice set of checks until you die. As rather, you keep it for yourself and put it here and get benefited, which is what IRAs are all about. Mm-hmm. And I think that's where we're going to start getting to that direction, where the government is going to say, this system has failed. We need to do something different. So we're going to put it in the hands of the individual to decide their retirement future and make their retirement investments.
Yeah, a lot of people have relied on financial advisors over the last couple of decades in order to ensure that they have a future for retirement. But it seems as if the 60-40 portfolio is completely
Yeah.
done with now, right? We have Rick Edelman coming out and saying that you need to put 40% into crypto in order to
that was
last.
a bold statement. And even more conservative guys and gals have said 15, 20, 25%. And not just in crypto, but also just in alternatives in general, something that is not a dollar derived or fixed income type asset.
Mm-hmm. And do financial advisors look kindly onto Bitcoin IRA? Do they understand it when their clients come to them?
They do now. This year, I think, especially since the Genius Act and the clarity that's come with the bills that have come out of legislation in the last couple of weeks, we're starting to see. I was I was up and down the West Coast last week in a lot of boardrooms with a lot of bankers, and the key conversation has shifted to, okay, we are going to be left behind if we don't embrace this. So for years, they were able to kind of fight off. I mean, JP Morgan's a great example. It's a Ponzi. It's a fraud. It's dead. You and I could go probably, I have a scrapbook of all the times they said Bitcoin is dead out there. It was easy for them just to kind of say, oh, that's nothing. That's not there. And they really did have a good control of their clients with that, because even if I was, say, a $10 million high net worth individual going to my advisor and 17 or even 20 and said, man, I think I really want to get some Bitcoin in, they would find ways to deter you from it, and then they were vindicated when the winners came, right? When we went from 20,000 to 6,000, or we went from all-time highs back down. That was, well, aren't you glad I didn't get you into that? Because they don't understand the cycles of this space and this asset class. Mm-hmm. Now, where we're at today with the guidelines of regulation in place now, race to reserve happening all over the world, not just in our country, but treasuries, corporations, nation states, all the gauntlet is saying we're racing to reserve Bitcoin. All of this is happening. They have no choice but to at least allow it to happen. And now they have the ETFs. I think you're going to start seeing more direct investment out of them for high net worths and more treasury play that you're going to see happening. Mm-hmm. So the era of that you have to ignore that as a financial advisor, I think that's behind us now. And now it's how do I catch up? Many of them that ignored it for a long time are saying, how do I catch up to this? How do I make this a part of because they don't want to watch those dollars of AUM walk out the door to alternatives and lose that relationship with that client.
Mm-hmm. So let's break down for the audience the differences between, say, an IRA, a 401k, and different retirement options.
Yeah, not a problem. So let's start two sectors: employee sponsored, not employee sponsored. Employee sponsored is your 401ks. That's most popular. You have 403Bs and 457s. Those are usually nurses, teachers, firemen, and policemen. So if you have any of those, thank you. Tip of the hat to you. Then you have what's known as the Thrift Savings Plan, which is actually a federal government program. It's for soldiers and for government employees. So those are all employee sponsored. And what that means is the employer you work at sponsors the fact that there's an account available. They'll have you contribute from your paycheck, and then most of the time they'll match a percentage of that, up to sometimes 5 or 10%. So that's your employee sponsored side. Those are really accumulation vehicles. They have most of the time, when you look at the investments available, when you check, like you go to net benefits at Fidelity, it's A fund, B fund, C fund, D fund. It's really about risk tolerance, and even their high risk is not like grabbing Bitcoin back in 2009. And so they're really about accumulation, stacking chips, but not really about growth. Then you have the other side, which is the individual retirement side. You are opening these accounts and funding these accounts for yourself. There's 4 of them. The two most popular are a traditional IRA and a Roth IRA. The 2 below, SEP IRAs, are growing in popularity. They're for self-employed individuals, there's a lot more small business owners and gig economy. And then Simples are for small businesses between, I think the numbers keep changing, but it's like 5 to 12 employees, where it's kind of like a mini 401k that a small business can put together for their employees. Usually like small family businesses put these things together. But let's focus on the traditional and the Roths. So a traditional IRA is designed as tax deferred, and you get tax benefit on the way in. So if you made $100,000 last year and you contribute $8,000 to your traditional IRA for this year before the deadline, you would lower your income by that $8,000. So now, instead of making $100,000 on paper, you've now made $92,000, which is helpful. It's a nice little deduction, could bring you to a different band of the tax brackets, right? So that's the benefit. And then when you're in it, you can buy, sell, trade all day long, and you have no tax implications, like if you were outside of an IRA, where you get capital gains short or long term, somewhere between 15 to 25%. The Roth IRA is, you still have all that benefit in between, but on the front side, you don't get to lower your tax bill, but they give you something even sweeter, in my opinion. So you don't get that lower from 100 to 92. You stay there. But when you reach that ripe age of retirement, 59 and a half, you start taking distributions, it is 100% tax free. FREE, tax free. So if you took and did Bitcoins back in 2000 and when we started 2016, put $5,000 in it, you probably have about 400, maybe 500,000 in a Roth IRA. When you distribute it, you will pay $0 in taxes on that. And this tool was designed by William Roth from the state of Delaware because we were in a savings crisis in the 1970s, and they wanted to put something out there that would incentivize Americans to start saving more. What better way to incentivize them to say, if you save long term, when you get to the age of retirement, we're not going to tax you anymore. That was the intent of the Roth IRA.
How many Americans have an IRA?
Well, that's a good question. There's probably $9 trillion in the retirement world today. And in IRAs in particular, I think it's somewhere maybe $1 trillion that's in there. So it's actually sadly, this great tool the government gives us to save long term and save on taxes, most Americans just ignore it because, like you said, it's a daunting task. And what do Americans do when something's daunting? They pick up the rug, they shove it under the rug, and they act like it's not there. But it's such an easy tool to use, and it's out there and it's available. What we're trying to do with Bitcoin IRA is make it more appealing. Not only is it, I mean, I remember when I was telling people 10 years ago, I was putting Bitcoin in IRAs. Some of them thought I was crazy. Others, and then others of them thought, what is a 30-year-old kid talking about retirements for? Because I'm a little old for my age, right? I got the gray hairs now. I'm 40. I got a kid and I've been through a couple winter cycles, but it's something you have to start thinking early about. And we lack it because there is a huge gap of financial literacy in this country today. They don't teach any of this stuff about long-term savings, compounding interest, how IRAs work, how taxes work, et cetera, in high school. Most colleges, unless maybe you're in business school, and then you're really learning about business taxes, not personal. There's no epicenter of personal financial literacy in this country. And that is causing some of these great rifts that we have, where we have a retirement crisis, we have huge income gaps, we have all of these things because people aren't being trained on money at the end of the day.
And there's a cap on the income you can have in order to have an IRA, right?
To have a Roth. You can make all the money in the world and do a traditional IRA. It's called the MAGI score, MAGI, and it stands for, God, can't remember those words today, but it's basically, the combined, if you're married, there's a certain number, it's about 150,000. If you're not married, I think it's like 125. Check with your tax advisor because everybody's different. But that means if you make more than that, then you're ineligible for a Roth. But that doesn't mean you're completely locked out of the Roth world. There's what's known as a backdoor Roth conversion it's very popular, especially in the crypto space, where you can either contribute to a traditional, or if you already have a traditional IRA, you can convert it to a Roth. Now, what that means though, is you're going to have to pay the taxes on that amount right now. So if you have $100,000 in your traditional account and you do a conversion this year, that's going to have a tax implication to it for that conversion. So it's going to turn it into ordinary income. So it does put a burden on your tax bill for the year. Again, definitely something to look at with your tax advisor and see if it makes sense. The last thing you want to do is try to be strategic about your retirement and get yourself hit with a huge tax bill on this year. I've known some clients that do it it's really popular when Bitcoin's in its winter markets. So when it's down to like 16 or 20,000, that's when people will do the conversion. Mm-hmm. Or if it's a year like COVID years where people were furloughed for a long time or lost their jobs and took a year off, then they have not a lot of income that year. So it's beneficial for them. But definitely something you want to sit with your advisor and your tax guide to make sure it makes sense for you. But it doesn't mean you're completely locked out of the process.
And you cannot withdraw until you're 59 and a half.
Yep.
Unless you have a penalty, if you do. Correct?
It's an early penalty for all types of IRAs. There are some exceptions with Roths in particular, first-time home buying expenses, college education, or higher education expenses. Some people use it for that. But yeah, the intent of why the government gives us this great tool is you got to keep the assets at an arm's length distance, and you got to keep them there until you reach the age of retirement. And we'll give you tax-free gains and tax-free distributions if you follow by those rules.
And then what does distribution look like once you are in your 60s?
When you're in your 60s, some folks will take out a whole lump sum. silly because especially in a traditional, you're going to have that tax implication at that point. Most folks will meet with their advisor at that time and decide, okay, I'm at retirement or am I not? You don't have to. Just because you're 60 doesn't mean you have to start taking money out. You have to start taking out at 72 now. That's the required mandatory distribution age. But there's only like 2 or 3% you have to take out. And so that's what a lot of folks will do. They'll do a percentage each year that they need to take out so they can manage their tax bill, but also have income to pay their bills or do the things that they want to do. What I kind of love about Bitcoin's platform, our platform, is that we have what's known as in-kind distribution. So when you do reach that age of distribution, whether it's the 59 and a half or the later one at 72, whenever you take money out, you don't have to sell off your crypto, your Bitcoin, and get dirty dollars, as I call them, and distribute cash and to your bank account. You can actually distribute your Bitcoin fractionalized down to whatever amount that you want to distribute into a private wallet and then continue to hold Bitcoin as a long-term hodler. So your hodling days don't end just because your retirement days begin, which I think is amazing.
I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code Bitcoin News and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video.
And can you pass that on to your children?
Yeah, so what will happen is when you die, if you have it set up as beneficiaries, so like my Roth IRA, if I died today and my wife's still alive, she would inherit. It would become an inherited Roth IRA. Or if something happened to both me and my wife, then my daughter would inherit those things. And those are all, we actually help clients do that all the time for their grandkids and things. Like we had a client the other day that didn't know grandpa was in Bitcoin in his IRA and was thrilled about it. He's like, how can I add more? And it was like, well, you'll want to open up your separate account because once you inherit something, you're not contributing to it anymore. It's just holding and then distributing at the age that happens. And that matches with the age of your grandpa. So distribution wouldn't reset because I'm 40. I've got 40 more years or 32 more years till distribution. It would be based upon the person that originally opened the account. When would they have been at distribution age? But yes, inherited IRAs are really popular. And it's important to have those in place because all that has to happen is the surviving family member comes with their with the death certificate, and we open up the inherited IRA form, move the funds over, and everything stays in that beautiful tax advantage setting.
And can you open one up for your kids, or do you have to wait until you start earning income?
They have to have earned income, but you can open it up for them before they're 18. So 18 is not a demarcation point. You can open up we call minor accounts for easy language, but custodial IRA is what it's called, where you're opening it up for the benefit of the child, but you are kind of the conservator or the guardian of that IRA. But they have to have earned income. So they have to do something that gets them a W-2 or a 1099 paper income. So a lot of people, most small business owners will put their, like my child's on the payroll, but she does interviews. She actually works. And then, so there's proof of her working. She gets proof of income. And then we do a contribution for the amount that she makes into her Roth IRA.
Let's go into your journey.
Okay.
You started off as an entrepreneur, correct? From the very beginning. You went to college, but you knew that you wanted to start your own business and...
No, actually.
No?
No, I went to college and I wanted to be a senator. I wanted to be, my Twitter handle is @Senator Kline. And I really believed that I wanted to go and run and be a senator one day. And I actually, right out of college, I worked on the Coloradans for McCain campaign. It was McCain Obama. And I lived in Colorado at the time. And I'll tell you, man, I saw the inner workings of the political machine and I couldn't have been more disgusted of an industry. I knew right then and there after that first cycle, not just because obviously we lost and I didn't have a job as of election day, but just watching the infighting and the way that the game was played. And also I came to this kind of realization, our founding fathers were statesmen second, entrepreneurs first. And entrepreneurs meant also being farmers, being lawyers, being blacksmiths, whatever it was that they were. They learned how to run a business and create good for the economy and the community first. And then in their later years, they became statesmen. And somewhere along the line, we lost that. probably around the turn of the 1900s into 1800s into 1900s. I think in the last 130 years, you now see more career politicians. And I was about to become one of those, and I was disgusted. I couldn't look in the mirror. I'm like, I need to go do something first and do something great to warrant why I should be in office, because all that experience you get as an entrepreneur and employing people and building businesses and the trials and the tribulations of it, and you really get that heartbeat of what it means to be an American and like bootstrap, that bootstrap mentality. And so I knew I wanted to go do that after that cycle. And so, but I had gone for poli-sci and international affairs. So I was kind of like educated for this. I didn't go to business school. And I picked up a job at a startup in Colorado that was doing high-end photo finishing, kind of like they were the Snapfish or the Shutterfly, but American-made products was their goal. Very ambitious goal. A really awesome founder. However, we just never were going to get to market. We were in that analysis paralysis of product development, but I learned so much. I made $24,500 a year. And this was 2009. So I was pretty underpaid even by those standards. But I learned all the backbone of business. My mentor at the time was Big A. He was Big A, public accounting. So I learned the P&L game. I learned all these things, learned the backbone of technology and how that helps supplement, understood operations. So I really got this kind of like crash course for about 2.5, 3 years. And then in 2009, my mom passed from cervical cancer. And I married my high school sweetheart and ended up divorced. Long story. We could go there forever. But so I'm sitting there and I'm 25, 26 years old. I'm divorced. My mom's just passed. And I'm making $24,700 a year with a college degree, and I'm bartending on the weekends. And I'm like, something's got to change. And my best friend at the time was going off to be a pilot in school. A pilot school to be a private jet pilot. So we were living together. He's moving to Texas, and I'm like, well, I've got to figure out where I'm going next. And him and I threw darts at the bar at a map for a few months, really, just kind of going back and forth. It was like New York, and then San Francisco kept kind of getting hit a lot. A little bit of Dallas and Austin, just trying to like, where would I go? I had no plan. New York scared me. And it still does. I'm 40. And I mean, this city, man, you gotta stay out of their way in this city for sure. It is, but it's so much fun too. So I ended up deciding on San Francisco, and I sold all my worldly possessions. I got a one-way ticket and narrowed myself down to one suitcase because I didn't know what was going to happen. And I go through, I first landed in Palm Springs because I have an uncle that lives out there, and I spent the Christmas with him, and my aunt. And then I took this like Astrovan bus into LA, and I was going to spend New Year's with some of my friends from my fraternity days out in Los Angeles. And serendipitously, in that week that I was there, I ran into my now business partners that we built Bitcoin IRA together, another business together. And they said to me, whatever you do, kid, don't go to San Francisco. Come to our offices. We've got some things we're exploring. We're really into the retirement space where they've been doing a lot of marketing for it, and they wanted to really kind of take over and actually build the business and build a really quality business. They had this vision in mind. And I said, okay, I'll come by. And 1 hour interview turned into 12 hours and then dinner. And I decided, you know what? I'm not going to go. I'm not going to go to San Francisco. I'm going to stay here. But I had no plan. I had about $3,500 to my name, and I had a suitcase. So I found around the corner from the office was a motel. And it wasn't like, there's like Motel 8, Motel 6. This was like Motel -2. It was pretty bad. And that's where I got a room there. And I think you could rent by the hour, but I was renting by the month. And I stayed there for 9 months while we built the first business. And it was, again, another crash course. I had really learned operations, technology, finance, but I hadn't mastered marketing and sales yet. And my partners were these amazing marketers and just really knew how to put the sizzle to the steak that I could manage. And then that was 13 years ago. And then 3 years in, we decided, we got the challenge of, could we put Bitcoin in one of these accounts we've been working with in real estate and precious metals, et cetera. And we dove both feet head first, and I'm so thrilled we didn't look back. I mean, now we're, it's been just about a decade. We're OGs in the space for sure. We've got just over a couple 100,000 users, 14 billion with a B assets in under custody, and we're doing some crazy stuff. We're not stopping. We're not slowing down. So yeah, that's actually my story. I'm not the traditional MBA from Harvard that did something. I'm a scrappy kid.
Yeah, I think the founding fathers would be proud of that story.
Yeah, they're not rolling over in their grave.
No, it's amazing. So it's really all about timing, right? I mean, you came into the space, and then Bitcoin started to blow up right as you guys started to offer it.
Yep. Basically, our first client was actually the former director of the U.S. Mint, Ed Moy, and he would worked with us on past projects. And we told him what we were up to. He goes, "Man, can I be the first?" I'm like, "Yeah, sure." I mean, I thought it was kind of cool too, because at that time, 2008, 2009 was when we printed the most amount of money ever. So he was the guy in charge when we made the most amount of monetary supply. Wanted to get the new monetary standard in his IRA. So I thought that was a really cool story, and he still holds it today. And then that was, I think, our first entry. My first purchase was like $175 of Bitcoin. Our first client was like $250, and then later the next year, that was summer of 2016. Later the next year, we launched Ethereum and some other alts, which I know we're maxis. We're not gonna go down there, but we just kept adding these coins and growing to really just this full tilt platform. We were old school back then too. It was like if you watched the original Wall Street movie or even Wolf of Wall Street, where they're doing phones and people were calling in because we didn't have any of the technology in place. We didn't know what we had created was so special, so we weren't ready with the infrastructure. And then all of 2018, 19, we dedicated to bringing a CTO on board and 24-hour trading and all those types of things, so that we could, because this is an asset class that demands a lot. The audience is insatiable. It never sleeps, and people are always looking for more and more and more tools.
What was the tech setup in the beginning? What did you custody with? Did you have hardware wallets in the office that you were?
No, we didn't go that bad. There were other startups that were playing with that game and it almost crashed and burned, because that's a mess. I mean, one ledger is hard enough. Managing multiple ledgers is crazy. No, we actually were fortunate. I did the research for about 6 to 8 months and met Mike Belshie at BitGo back in 2015. Went up to Palo Alto and worked with him and his team at the time to build the first multi-signature configuration for retirement custody, what it would need to look like, who would need to have access to the keys. They were the Brinks of the industry, in my opinion. They've always been forward thinking and security, dedicated to it at another level than anybody else has been. So we had them. And then there were several OTC exchanges at the time. A lot of them have gone out of business over the years, but we wanted to be able to, we never wanted to take people's money, put it on an exchange, buy it, then pull it back to cold storage. We wanted to settle cold storage to cold storage. That was a key piece of the configuration. So we got the wallet, we got the OTC settlements, and then we needed a custody relationship. We needed a trust company. At the time, we had been working with Kingdom Trust out of Murray, Kentucky. So, of course, we went to them and said, can we do this? And they thought I was crazy. I flew out there. Well, you have to fly, then you have to drive for a while into Kentucky. You had to go to Nashville, and we went in there. And eventually, we went for forgiveness, not permission. After about 6 months, I just did it. I did Ed's count, and I said, "Hey, we now custody crypto, so we've got to figure this out." And that was probably, they hated me that day, but they love me today, because we've actually since merged with them, and they are part of our overall size. So we went and built our own trust company at some point, but we've merged with them, and now we overall provide for the whole industry as kind of a team. And so the guy that I asked for permission and versus forgiveness, he's now our chief operations officer over at Bitcoin IRA. So it's a cool world. It's just a cool story that we went through together.
And when you started, what was the regulatory climate like? Were you worried that this would raise a lot of red flags?
Oh yeah, it was terrifying. Well, at the very beginning, having a trust helps, because that makes you're exempt as kind of like a non-bank setting. But the hardest part was as a business. So those first few years where nobody really knew anything about it was fine. But once that first winter came and you could tell there was some buzzing happening in the regulatory space, it became hard to open up a bank account for the business, because our name was Bitcoin IRA. And there was just this blanketed, the government and regulatory agencies, they use very thick Sharpie markers, as they just, nothing's allowed. They're not very pinpointed about it. So it's like a blanketed approach. That was really difficult. And it also impacted your personal, because if you had a business account at the same bank and that got shut down, then they were looking at your personal accounts and they were wondering things. I mean, pretty much anybody that's OG in crypto for the last 10, 12 years has had some problem with their bank in terms of having Bitcoin transactions, right? And it was the same for businesses. And that never really got easier in that first crazy run, 17, 18. But then that first winter, it got pretty tough. But then, as we all know, COVID hit. That distracted all the regulators. That was a whole nother world. And it was pretty easy to do business, because it's really hard to shut down something that had that kind of momentum. Like Bitcoin was on fire, went up to almost 65,000. It was a huge run in from COVID through to 21, to the September 21. But then it got really tough after FTX, Alameda, and those things. And anybody that's in this space will tell you those were tough years, because that was the industry shot itself in the foot. It was driven by greed. There was rehypothecation of lending, staking. It was a mess. And most of us on the outside, because none of us we weren't doing those tools at the time, we could see there was something wrong here. I mean, it was pretty obvious when they were paying out in some of those coins like 18%, 19% interest rates. I was like, well, that's unfeasible. That's somebody's stealing from Peter to pay Paul. Like and that crashed pretty hard. And that was one of the toughest times to be in crypto as an entrepreneur, just to get through that winter, because it was a self-imposed winter. We were already on a cycle for it, but then we just made it even worse. We perpetuated it by what had happened in those fallouts, and to the common public too, like the consumer. To build trust with the consumer, especially you're dealing with their retirement accounts, that we're different, right? You're like, oh no, we're not like that. But when Bitcoin's so new and that concept, it's very difficult to really differentiate yourself, because we get coupled in. I tell people that all the time. One bad actor in the crypto space hurts all of us. It really is. We're still in our adolescence. And people are like, don't realize, yes, it feels like, I mean, I know 3 years in crypto feels like 30 years in traditional finance. But we're still in adolescence here. We only have maybe 5% mainstream adoption at this point from the retail play. And JD said where we met at the conference, he announced 100 million Americans will own Bitcoin by the time the decade's out. That's a big, bold move. And that means we're going to have a lot more adoption ahead of us.
In terms of scaling, you guys went from a couple dozen customers to now 200,000.
Yep.
What kind of lessons have you learned just owning a business that grows that quickly over a decade?
Clients are forgiving to an extent, but they're also very impatient, especially in our industry in crypto. So we needed to get 24/7 trading as quick as we could. Mm-hmm. The concept of 24/7 trading with a retirement asset had never been done before, because there's never been an asset that was 24/7. So we were out there in the Wild West. We were on like what I called the Oregon Trail. And it was, and there's threats everywhere. You know, things could go wrong. Because you have to not just protect your systems, you've got to protect the client from themselves, which is, they can get SIM swapped, or they can get email hacks and those things. And then you have to keep everything as middleware away from all the wallets and the cold storage settlements and settings. So it was a very complex layered stack. We had a great two CTOs over the years that have both been amazing. That came from I think Rocket Mortgage and 1-800-Dentist or like big brands that knew how to build solid stacks. But even for them, we were on the cutting edge. And so you have to dedicate a lot of time to security. So, a lot of products, you get, if you're doing some e-commerce thing, you plug in like a Shopify or something like that, and then you're really just spending time branding and those things. We were really building things from the ground up because there was nothing off the shelf. So that was, to get there was an interesting, and then you have to figure out how to scale your business beyond. We were all word of mouth at the beginning. We did like a press release and announced. I still have it framed in my office. Our first press release was when we hit $500,000 of deposits, and that was a big deal. We were like, oh my gosh, $500,000 of deposits, and now I look at that and I'm like, man, that's like a daily thing now, right? That's what scale looks like. You got to hire really good people. So for those that are out there, you got to put the best thing as an entrepreneur and as partners we're a group of entrepreneurs, is you have to hire people that you can trust when you take that week off. Like otherwise the business owns you at the end of the day. So it's a challenge to get kind of through those steps.
Take me through the customer journey.
Okay.
I'm a guy in my 30s. I want to start contributing $7,000 a year to my retirement, but I know I want to put in Bitcoin, but I want to go through you. What does that look like?
Yeah, absolutely. So you can start, you can go just to bitcoinira.com. I think there's a special link, bitcoinira.com/Bitcoin news, that you'll probably share down in the body. But use that because there's some nice little perks to being a Bitcoin News audience member. And we'll get to that. So you can start there, or you can download the app. You can go to the Apple store, the App Store on Apple, or the iOS or on Android. Download the app, and you'll set up an account in about 3 minutes. And it'll just have you do like name, email, phone number, the basic stuff to get the first piece open. And then to finish the online application, you'll want to have your ID handy. And that's pretty much it. And then it'll go through, it'll get personal information from you. You'll mark a contribution, and then you actually can link your bank account right there on the spot with Plaid, with the EFT connection. And then the account will be opened usually the same day, and then those funds just have to clear, and you'll be off to trading in a matter of a couple of days in your IRA. And the funds will come through. You'll sign a deposit form so that we can send that to the IRS that you deposited your $8,000 or $7,000 or whatever you do into your IRA, so that you get that benefit. And it's categorized as a tax sheltered or tax advantaged tool. And then what a lot of folks will do too is that's just contributions. There's two other ways to fund. There's rollovers and there's transfers. So you might have a old 401k from a past job or an employer. I always joke, don't leave that behind at your old job because it's like leaving your favorite hoodie at your ex-girlfriend's house. You definitely want to bring that with you. And that can roll over. It stays in the same tax advantage. So you can roll a 401k after employment can roll over into a traditional IRA. And so you stay in the same tax setting, but now you're over here and you can use those funds. Those are usually done. We usually help you. We'll call your 401k provider to have them issue a check and make sure it gets shipped off expeditiously via FedEx. We know that all the little tricks to move that quickly. We have real people that help you with that, by the way, not like robots or chatbots. And then the transfer is really popular for folks that already have an IRA and they're saying, you know what, I'm doing okay. I've got maybe some Nvidia. I've got Meta did really well in earnings this past week. I have some of these, but I have this little portion that's kind of like a little bit not languishing. I'd like to take that and put that into Bitcoin. Or if they're in the ETF and they want to have the real thing, I'd like to take and sell my ETF shares and go over and get some real Bitcoins that I can distribute later. Those are all functions that you can do to fund the account. Once you're in there, it's self-directed. So you log in on the mobile app or on the website, and it's whatever your flavor is. I'm more of a mobile app kind of guy because I like to be able to have it at the palm of my hands first thing in the morning and at night, and I have my price alerts set up and all that. So if things are moving, but you'll go in and it's click, 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 buy whatever coin you want, whatever quantity you want. We have 80 different cryptocurrencies available. If you want to dabble beyond Bitcoin, there are other options available. And then also, if you do go into some of the alt space, we just launched our staking program about 3 weeks ago, 4th of July. And we're thrilled about that. We have Ethereum, Solana, and Cardano are the three that are now stakeable. By the end of the year, we hope to have 15 stakeable assets on the platform. But it's pretty straightforward. It's just like any other IRA. You're just getting this access to a whole new ball game of asset class.
So do people trade on a weekly, daily basis through this?
Not a lot. I would say that the largest percentage of our database and our accounts under custody are hodlers like you and I. They've bought Bitcoin and they're just stacking sats. So they'll buy and they keep going and they keep going. Sometimes there are profit takers that, some of those people that got in early at $200, $300 Bitcoin, they've sold off some and put it into other alts or rolled it into precious metals, long-term holding in gold. Some have put it into real estate assets. So all those tools are available in the same account because it's a self-directed IRA. So you can do all those things in there. But there are the day traders too. There are the people that go in there and they're playing, they watch the YouTube channels are out there, the technical analyst guys that are, this is happening here and this is the cross here and this and these things. And those guys do just as well over the years too, as long as they're disciplined about it. I've always found that the most common folks are the DCAs, the dollar cost averagers, they'll say, okay, I'm going to get started with 7,000 and then I'm going to start my monthly contributions after that. Or I may roll over 50,000 from my old 401k, and then I'm going to do 5 trades at $10,000 a piece across the next 5 months, or they set their strategy because it's a volatile asset class. It's and any day it can swing a few percentage points. It doesn't swing like it used to. We used to see some big swings back in the day. It's definitely, I think, with institutional adoption and just this wave of race to reserve, and also just the finite scarcity of it. A lot of it's been accounted for. That I think that's where we're starting to see this stability. It's still a volatile asset class, but it's much more stable than it was, say, 5 or 6 years ago.
If you try to time the market and get out at the top, could you sit in cash in your IRA before you move it? Nice.
You could sit in cash, and then you can put it in other things. You can swap instantly too. So if say you did go and do ETH and it hits, because it's been on quite a bit of a run lately, if it hits the market that you want it to be at, you could swap instantly into Bitcoin, no delay, which is kind of nice.
No delay, no tax. That's beautiful.
No delay, no tax. Right?
And what's the biggest misconception about IRAs when people just get started with this?
As for old people, it's actually not. It's if you start it young, then you're going to have a great old man's life. If you wait till later in life to think about IRAs, the later you start, the harder it is to really grow. And that's even not with just crypto. That's just compounding interest with cash. If I was Warren Buffett right now, if you can start at 18, 19, putting aside money and running it with compounding interest, you can run the math. You're going to have a lot more money when you reach your retirement age than if you start in your 30s or 40s. So I think that's the biggest misconception. And I think the other big misconception I'm hearing right now with Bitcoin hitting all-time highs over the last couple of months, and I've predicted, I have a feeling that we're going to hit 180,000. I mentioned that to you in April, right? This year, that people will feel like, I'm too late. I missed it. And I think that's the worst misnomer. It's never too late. Now, will you pay different prices? And everybody pays different prices to get into Bitcoin. But scarcity doesn't make sense to Americans anymore. We've been living in this world of abundance for years, that the concept that there's only 21 million Bitcoin that exist, they don't realize that that's no joke, right? Like there's no backup plan with more Bitcoin sitting in a hidden room somewhere. It's done at 21 million. And when that happens, and even now we're at 19 and a half, it's the mining process is like 10 times more difficult than it was before the last halving cycle. The next halving cycle, people will be competing for almost less than 1 Bitcoin as far as each block. This is where you're really going to start to see it. So you got all this demand going crazy and supply actually being constrained on the other side, which we're not used to. We're used to the blank check of the US government, the Federal Reserve, just turn the printers on and we've got more monetary supply. The concept of fractionalization is going to kick in, and people are going to realize to have even just 0.01 Bitcoin or 0.1 Bitcoin is going to be life-changing at some point in the near, not too far distant future. We're not talking 30, 40 years from now. I think most pundits out there, even the ones calling for $1 million Bitcoin, are calling for it in the next 10. And it will happen fast. It's not one of those where you wake up and scarcity it's actually happening slowly right now, but nobody's noticing it. But when the real impact of scarcity kicks and liquidity starts to dry up in certain places, that will be where prices can move so crazy and exponentially. Because I know that a lot of traditional finance guys will say, oh, well, the guys that got in earlier, the liquidity for the guys that come in later. I know a lot of guys that got in early, myself included, we're hodling for a long time. There's not a price point that gets me away from my Bitcoin, because I don't know what a second best option. What am I going to do when I sell my Bitcoin? Sit in dollars and lose 10% per year in my purchasing power because the dollar continues to fade? I'm not going to sign up for that. I don't know about you, Rob.
No, definitely not. And one line that you like to use is that Bitcoiners don't realize that they actually have 25% less Bitcoin than they actually have.
Yeah.
Explain that.
So if you are in a non-IRA setting, at some point in time, you will have to sell, or you will sell your Bitcoin for profits, or even swap it to another coin of some sort, whether it's a stable coin or Ethereum or whatever. You will make a change. And when that happens, you whatever you bought that Bitcoin at to where you're going to sell it at is a gain. And the government in the US takes what's known as capital gains taxes. If it's short term, so if you hold for less than a year, then it could be upwards of 25% or higher. If you're longer term holding, you can get it down to like 15 or sometimes 12.5 or 10. But so people don't realize that outside of an IRA, when I do transactions, and that's a common misnomer too, is that, oh, a swap's not a transaction. Oh, yes, it is. If you turn from one coin to another, just by selling one house and buying another, the difference between what you bought it for and sold it for is a gain, and there's capital gains implications. And so a couple of the other pundits that I work with, they talk about this, the horror stories of folks that guys that didn't realize they made a swap, made a bad swap, got into another coin that plummeted in a winter. And because they made that swap, they have that gains tax that's going to hit them. And maybe there's not the money left over because the other coin, now they're holding the other coin waiting for the next cycle. It's a minefield out there. And the one thing you want to avoid is taxes if you can. Thus, why not? If you really believe in Bitcoin, you are probably already a Bitcoin believer. Get some more, because we all stack all the time. True Bitcoin guys are stacking constantly. We'll buy any dip that's out there. Keep doing that, but take it and do it in an IRA setting. Use some of your 401k for it, so that when we hit that glory day of $1 million Bitcoin or $10 million Bitcoin, where you're in a tax advantage setting, which is because taxes will just generally go up. If there's anything we've learned since 1913 and the advent of the Treasury and the Federal Reserve, dollar value goes down, taxes go up. Those are probably two standards in life.
Thank God for Bitcoin.
Yes,
right?
That's the future.
Another interesting thing I heard you talk about is that somebody actually had a business inside of their IRA. Mm-hmm. How does that work?
Well, Peter Thiel does it. So, and that's one of the things, that's why he's got like a $6 or $7 billion Roth IRA now, is you can take shares of private businesses, private equity. You can take stocks, which is basically shares of a business. It can't be your business. If you own more than, I think the rule is 10% share or like ownership of a business, it can't be in your IRA because that's a prohibited transaction. But if there's a small business that is issuing funds in a private equity or a venture capital sense, you can use your retirement funds to buy shares of that company. Okay. You can also build what's known as an LLC IRA owned LLC. So you can take and you can build, there's single member LLCs that are designed for this. And that asset, that's what's held by the IRA. And then you basically, it's called checkbook control or ultimate control. And a lot of folks use this for real estate. So they'll take their IRA, 100,000, and they'll put an LLC in there, and the IRA will buy the ownership of the LLC for 100,000. So now they own this LLC. The LLC now has on its books $100,000 of equity. And it will go and use that to purchase a house or purchase a real estate investment or something like that. Again, can't be the house you live in, can't be the house your sister lives in. It can't benefit you directly. It has to be arm's length distance. And so there's some specialty firms. We actually just recently acquired one that can support that. So if that's something you have interest in, we can, through our trust company, we can help with that. Digital Trust.
You're a father.
Yes.
And I'm sure you're teaching your daughter all this stuff, right? But financial literacy is lacking so much in this country. If you were put in charge of the Department of Education, how would you teach America's youth about finance and what they need to do to prepare for the future?
I'd start making it part of the core curriculum early on. And I've actually tried to do that as a parent volunteer for my child's schools, for my daughter's schools. I went to her TK and preschool, and I went and taught the kids about Bitcoin by showing them the evolution of money. So, every preschool's got that like store, that little grocery store. I put that at the front. That was Izzy's store. And I took 4 volunteers. I dressed one up as a caveman, another one up as a Roman soldier, third one just like you and I, maybe a little bit more down dressed, and then a fourth one in an astronaut uniform. And I gave them, I let them all go shopping at Isabella's store. The caveman, I gave him a rubber chicken and a rock, and I said, "This is how you're gonna you can go buy your goods." That's barter and trade. That's how cavemen used to acquire things. They'd bring a pelt and they would get food for their family from that pelt, etc. Gave the Roman soldier a silver coin. So that was the first concept of coinage in silver. Actually, the Greeks, I think, did a little earlier. And actually, the Mayans might have even done it before them, but they were in different parts of the world. So it made sense with the Roman soldier. It was the easiest costume to get to. And then the kid that was our generation or our age, I gave a $20 bill, which, by the way, that kid pocketed that $20 bill, I found out. I hope he bought Bitcoin with it. At least that would have been a smart investment. And he went and used the 20 to buy and trade things. And then the astronaut, I opened up because you can't buy things with your IRA. So I opened up my Coinbase account, and I had Izzy's little thing, merchants, and I had them trade Bitcoin instantly like that. And yes, they're in kindergarten, right? So I don't know if it really clicked for them, and I have to ask some of those kids like 20 years later, but I'm just trying to be the change that I wish to see in the world. And if I can impact those, and we're actually working on a tour for next year of kind of like a race to retirement type tour. I was going to actually do it by train with my daughter. We were going to do 15 cities and get on the train in Los Angeles and end in like Louisiana, and then fly home to Scottsdale, and kind of every stop work with a local school and a local community to do financial literacy. But it's really going to come down to community. Federal government, and don't take this as the wrong way, but I always believe in Ronald Reagan saying is the worst thing you can hear is, "I'm from the government and I'm here to help," right? This is something that also starts at home, learning it yourself. And there's so many resources available, and AI resources available to get yourself caught up in AI. You can actually take your credit card statement, your income, and all these things, go to ChatGPT, pump it in, and they will give you recommendations on how to have a better budget. I know there's 1,000 tools out there like NerdWallet, SoFi, et cetera, which are also great, but for some reason, and maybe you need a robot to tell you, "Hey, stop spending so much money on these things and start putting $100 to $200 aside in emergency savings and do these types of things." It starts at home, like I am with my daughter. If I was in charge of that, I would do some kind of grassroots campaign to really start, and maybe incentivizing people for it too. One of the things is we always just say, save, save, save. We're a materialistic consumerist society, right? So we're talking out both sides of our mouth. We're telling people to save, but we've got all these options available. I was just down at Times Square, and the billboards are everywhere, right? And the shops are everywhere, and the tourists are everywhere. And that's the world we live in, whether it's Times Square or it's Main Street in any major city in America or small city in America. You have to find a way to incentivize Americans, just like they did with IRAs back in the 1970s. I'll give you this benefit if you do this thing. And we need to do something like that if it's going to be some kind of government-driven education program around financial literacy, is incentivize people to do that. We're working on a program right now that'll come out next year where we're putting out, you can get your retirement score, kind of like you can get your credit score or your Uber score, like your score on it. And then it incentivizes you to do certain things to increase your score. It's not like you go to a creditor and they look at that score and say, oh, well, I'll give you more debt because you have a higher score. It's for your own self-validation of I'm on track for retirement. And these are the things. So if you do your annual contribution, if you invest in something outside, if you take a financial literacy course or share it with a family member, all things that you're doing your part to help the overall health of the local and global economy. And it's going to take more people than just me and my team. It's going to take a lot, and we all can do our little part. I know that at this point in time, especially as Bitcoiners, we are kind of getting tired of orange pilling people, right? I mean, it's exhausting because some people just don't want to believe, right? I actually had when we were doing some interviews earlier this week at another studio, my wife and my press director were downstairs. And they were doing like Jay Leno, Bitcoin on the street, going up to people. And some of the feedback they got, obviously it's hot here, so not a lot of people want to talk to him. But the few people they did get to talk to him, they don't understand it. They haven't taken the time to learn anything about it. And that's also, you have to take the first step. This world is about you have to take that self-directed action to get further in life, and make sure that you're encouraging your kids to do it. And the school should be thinking outside the box. I'm always pushing my daughter's schools. You should be teaching the history of money. You should be teaching how currency works. It shouldn't just be, I mean, all I learned in grade school was how to write a check. That was it. And I've never written a check since. I don't know about you, but I don't use checks. So we have to definitely do a little overhaul on the curriculum standards to get there. But now I'm on a soapbox preaching, but that's what I would do, Rob.
I love it. And on YouTube, you see a lot of these thumbnails that say, all you need is 0.1 Bitcoin to retire. But
a lot of those, yeah.
You see a lot of that. But as someone who's in Bitcoin and in retirement, what do you think is a good goal in terms of Bitcoin in order to retire?
Getting off zero is first.
Yes.
So if you're going to sit on the sidelines and just watch a bunch of YouTube videos and not go open up an IRA or not go and even just get an exchange account if that's what you want to do, and not use the tax advantage settings of our platforms like ours, that's the first step, right? That's the first step to the next evolution. So you have to start there, get off zero, get some exposure, experience it. I used to have a buddy that would send 75 cents of Bitcoin to friends and family so that they would be forced to open up a Coinbase account, get a wallet, and understand how the whole thing works. So that's the first step. And then after that, you go back to the question you asked at the beginning. Okay, what do I want my retirement to look like? How many years do I have until retirement? How many years after retirement do I think I'm going to survive? Do that rough math of what am I spending now? What am I going to be spending? And then expect that prices and costs are going to double or triple. And the nice part is that double or tripling price by the time you reach the age of either retirement or death eventually, you can hedge that with a store value mechanism like Bitcoin. Because we all know with the scarcity of it, if we're at $118,000 today, we're going to hit $200,000 this time later this year or early next year. And then it's off to the races to $1 million Bitcoin. So yeah, up at that point, 0.1 Bitcoin would be a pretty healthy retirement. Just do the math for yourself. If you know you need $1.5 million, then what is that in Bitcoin? And where do I think Bitcoin is going to be at? But don't put all your eggs in one basket either. Diversification is key in all areas of financial services. So make sure you've got some cash, gold, silver, Bitcoin, maybe some Ethereum. I know you're not a big fan of any other alts, but I think there's going to be some nice days there. And also the standard stuff, some stocks, bonds, mutual funds, fixed income. The modern portfolio theory is got a lot of pieces of the pie.
Mm-hmm. Well, Chris, that was a masterclass. Thank you so much for your time. If people want to find out more about Bitcoin IRA, where should they go?
Absolutely. So bitcoinira.com, the link's below, and make sure that you either use that link or you can call. This is my proudest thing about our company. Instead of going full tilt digital, we have real crypto, real people that can help, because retirement is not a one size fits all strategy. Everybody's got different questions. You've had a lot today. Everybody's got their own version of those questions. You can call 877-936-7175, and you can talk to a person about 90 seconds during business hours. These guys are not just some kids I pulled off the street. These guys and gals have been working with me almost a decade, some of them like 12 years, helping Americans retire, opening up accounts. They'll be there for you. And that's a great starting point. And then remember to tell them that you learned about us from Bitcoin News. We have a Summer of Freedom program happening right now, which is they can earn up to $1,000 in rewards by being an audience member and a subscriber to Bitcoin News and coming to Bitcoin IRA. So it's good for all of us.
Cheers. What a great place to start. So if Bitcoin gets to 15 million in 20 years, all you need is 0.1 Bitcoin and you're good to retire.
There it is. You did the math for me.
All right, Chris. Thank you so much.
Thanks, man. Thanks for having me.